we're going to do now is we're going to go to our very special segment called the Editor's Cut. And Neeraj, why don't you sort of set the stage for what you're talking about it? And of course, Alex and our other colleagues are now in the studio to focus on specific stories which will help you start the trading day.
Yeah, I'm going to be talking about aviation and why there is consolidation. But let me try and do this. Let me try and tell Alex, who's joining in, to tell us, Alex, let me take my phone as well. What is the Editor's Cut about, and what do we have today?
So a lot of viewers tuning in for the first time today for the Editor's Cut. This has been something that has been in the works, I must point out, for a while, and we have attempted to present this to you in a manner that gets you the story or the insight behind the headline. So you've probably already heard, even on this program, about GMR and the acquisition of stake by GQG Ventures. But what does that have to do with consolidation in the aviation space? That is what Neeraj is going to be talking about. There's also going to be a bit about what this stake acquisition is all about. Where does that value GMR? And who's doing the acquiring? Who are the sellers? That should also tell you a story. And finally, we're also talking about HDFC Bank. Now, we pulled out this data at the end of November, and there are a few instances in the past several years when over a 3-year period, there has been an absolute return for HDFC Bank of about 8%. And each time after that, barring one instance, there has been a very rapid growth for the stock in price terms over the next 1 year. Harsh is going to give you some perspective on that and lay the fundamental groundwork to say why that could in fact be happening this time as well. Let's talk about aviation first and the deal. Before we get into the consolidation in the aviation space, Ajit, it's not a straightforward deal, and it's not the promoters that are selling. What can you tell us about that?
That's true. If you look at the deal, it's been done by, the acquisition is done by GQG. They've acquired nearly 4.7% stake in GMR Airports, which operates 6 airports, and there are 3 airports which are under construction. It basically tells you that the GQG has been very good in identifying infra targets which are up in the next 1 or 2 years. They may start generating cash flows for the company, and they've entered GMR Airport at a time when 3 operational airports are going to come into being in the next 2 years. 108 odd million passengers travel through these 6 airports which are there, and GMR is there in the emerging markets where the maximum growth is going to come in from. By the way, it's the second largest airport, private airport globally, but it's valued at 11th.
The 11th largest globally.
11th in value terms, it's the 11th largest, but in passenger terms, it's the second largest globally. So there is a issue of being undervalued in that sense, and GQG I think is betting on the fact that airports as a business is going to grow. There is as of now only one airport which is listed in India, but maybe going forward, Adani has also set his plans in motion that once the assets get mature, they may demerge that from Adani Enterprises Limited. So you will see some kind of valuation trickling down to other stocks like Adani Enterprise, which holds Adani Airports. But fact is that 70% capacity is yet to come in. That means that the cash flow is going to just come in next 2 to 3 years, and GQG is taking a bet on that.
Speaking of GQG and speaking of airports, it's not like they haven't already taken a slice of the Adani entity through enterprises, and that's done well for them.
Yeah, I mean, the street would believe that GQG knows how to bet on infrastructure, right? Because their investments in Adani Enterprises, for example, has yielded them 100%. The March investment, that is. I'll fetch your pen for you, Sajid, don't worry. Standard disclaimer, of course, the Adani Group owns NDTV, so just want to lay it out. But yeah, the point that I'm trying to make is, and guys, weigh in if you feel otherwise, but the point that I'm trying to make is, that is consolidation in the Indian aviation space going to aid multiples at some point of time? Is it advantage everybody associated with aviation? Now here's some data points. I mean, Sajid spoke about the GQG deal, right? They've also raised that slight capital to develop the airport, etc. and stuff like that. Now, let's start with airlines and then move on to airports. So airlines, here's some data. Indigo or Interglobe Aviation and the Tata Group Airlines, which is Air India, Vistara, AirAsia, affiliates, etc., accounted for about 89% of all the market share in the month of November. 89%. So 2 airlines between
domestic.
them. Yeah, of course, domestic. Yeah, accounted for 89%. We know domestic is the pie which is growing.
Right.
So is the sector at 2,200 or 2,400 per dollar GDP per capita already consolidated? The answer seems to be an unequivocal yes, right? Unless Akasa steps up, etc., etc. For now, it seems like it's a consolidated market, right? So, and look at the October data. Indigo, 62%, Air India, 10%, Vistara 9%, AirAsia 6%. This is as per Bloomberg and the Directorate General of Civil Aviation data. The point is, even, and it's not just a recent phenomenon, by the way. There is a chart which we pulled out from our IIFL securities note, which shows what Interglobe Aviation's market share has been since the last 7-8 years. And this smacks of what strength there has been. This is passenger traffic, of course, but just the and the Gophers bankruptcy, etc. SAR coming off is separate. But the point being, Indigo's uptick in market share has been stellar.
But that means pricing power, or would you argue, so I would argue that there is still a bit of an issue in terms of pricing because the regulator steps in or the ministry steps in saying, hey, you can't raise prices that much.
Yeah, for sure. That may happen, right?
Yeah.
And that's a let's say an upside cap, if you will.
Sure.
But largely, you would presume that they will get the market share, and therefore they'll get the passengers, and therefore they'll get the earnings. So that's part one. Then look at airports. GMR, by the way, Goa, Delhi, Hyderabad, Bidar, Visakhapatnam, only on the domestic side. I'm not talking international right now at all, right? So GMR, these 5 airports under its fold. Adani Group, Mumbai, Ahmedabad, Jaipur, Lucknow, Mangalore, Guwahati, Thiruvananthapuram. 7 airports. There are others, of course, but the point I'm trying to make is, if the airline space and the airport space are consolidated already, you would presume that investors would believe that earnings power will be high, ROCs will be high, and therefore they will be willing to bet on these businesses. If India also becomes a transit hub at some point of time, which is the stated ambition of the government as well, right? That aids the airport's business too. So there is a case for private airport operators, viewers. That's the last point that I want to make here. And the case is that when you saw one, of course, that if we become a hub, and therefore that aids airport traffic. If airports become a place for leisure, right? Because you go early because the traffic is going up, and then you have all the malls, the theaters, etc. All of that is happening in the Navi Mumbai airport, is what I hear. By the way, airport capacity expansion at Pune by the government took really long. GMR did a greenfield airport in Goa in a much shorter time. So maybe newer airport development goes to private operators. So all of these, you can make an argument that there is benefits of consolidation for these both airlines as well as airport operators, and maybe that aids multiples in times to come.
Just to add the capacity part of it, you spoke about consolidation in aviation. There's a consolidation in airports happening as well, because and it's 60 to 65% is now been managed by, of the passenger traffic is managed by these 2 entities which is there going forward. And if you look at the aviation space, we have 1,000 more aircraft being ordered by 2 of the airlines, Indigo and Air India.
So you're looking at capacity coming in.
Yeah, capacity coming in.
Only on the point of the hub, my worry is that one issue that has yet to be fixed is ATF and the prices of ATFs from the global side.
What we can't fix, we can't fix. But and just one final point, at time, you shouldn't follow money blindly, but you bet, you look at who is betting on what. And we know, like I made this point at the start of this chat, right? GQG bet on Adani Enterprises and the Adani Group have paid off handsomely. Their bet on JSW Energy has paid off very well. Their bets on ITC, HDFC Bank has paid off handsomely as well. They've just made a bet on GMR airports and the airport infrastructure story in India. It pays to research these very, very well. We might be in for a good time over the next 5 years for the aviation space.
Fair point. All right, let's talk about HDFC Bank as well, which is, since the point that we identified this, by the way, it's run up already quite significantly, but the potential upside from this point, Harsh, is also significant.
Well, yes. So, Alex, you correctly made the point at the start of this conversation that HDFC Bank has underperformed, and underperformed by quite a bit. Only 8% absolute returns in the last 3 years up to November. That's happened on only 4 occasions in the last 20 years. Once in 2003, once in 2009, 2020, and 2022. Let's remove 2022 because that was an outlier event. There's a special situation there. Where it comes to 2003, 2009 and 2020 are the only 3 occasions where the stock price was trading in or below 3 times. Twice, 2 out of these 3 occasions, it was trading below 3 times price to book, once at 3.1 times price to book. And thereafter, in the following 12 months, the stock has given a return of 50 to 100%.
Right.
Now, mind you, at no point of time was the stock nearly 15% of the Nifty. So this time around, you have a stock which is roughly 15% of the Nifty, which has been a strong laggard for the last 3 years. And there is a possibility that it could generate that outperformance. In fact, it has already generated 9% since almost the end of November, since the last week of November.
So it's been a very quick run up in a very short period of time, but what do the consensus estimates in terms of target price point to? I believe at that point when we were looking at the data, it was suggesting an upside of upwards of 30%, right?
Yes, so it continues to suggest an upside of over 25%.
Right.
Also, you have one more tailwind that's coming through. Strong FII inflows have started to come through, and that's visible. And largely, the consensus view is that FII inflows go into financials to a large extent, given that 30% of the Nifty is banks, and they are the largest of the large caps within the overall, overall sectors, right? So, and therefore, you will see good inflows coming through there as well. And therefore, with all of that tailwind, there is a good likelihood that 2024 could be the year for HDFC Bank.
Closing point, and just to make this last point, we have had a lot of analysts point to the possibility of a bit of teething issues in the first year of operations of the merged entity. Any headwinds that an investor should watch out for at this point?
Yeah, 2 things, Alex. That's a critical point. The downsides need to be understood well. One is that your margin expansion has to begin. We've seen margins bottom. That's continuously been the commentary coming in from the management of HDFC Bank. Therefore, you could see a margin expansion happen over the next 2 quarters. Of course, over the course of 2024, we would see a good amount of margin recovery. One would have to look out for that. And ROA is therefore, profitability therefore has to start to come back in a big way. So with both of those factors to be looked at, and of course FII is coming through in a big way, there is a good likelihood that if all of these factors were to play out, HDFC Bank could outperform by quite a bit.
All right, on that note, let's slip into a very quick break. We're done with the editor's cut, but there's lots more lined up before the start of trade, and you should stay tuned for that.